Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Hope everyone's doing well. We have yet another pretty quiet day on the economic calendar front. Let's jump on over there for a moment and you'll see here. There we go. Moving on down to Wednesday. The main hot zone is a sneaky one. It's a pretty sneaky one this morning, and it's one that a lot of times we can overlook as day traders mostly, or a short-term swing volatility event, and that's the Bank of Canada. Bank of Canada events around monetary policy, central bank events, have been moving the U.S. markets. So heads up. So no sooner do we get through the clearing range, the opening range, and we've got this BOC event. So that's going to be at 10 o'clock. But then that's pretty much it. It's a pretty quiet calendar, and it's been that way here for most of the week. And you can tell it's going to be pretty much that way through the remainder of the week. We have our weekly unemployment claims, but that's about it. So our most important data release thus far has been, if we go back up to Monday, the ISM Services PMI, and then we jump right over into Bank of Canada, and then tomorrow our weekly jobless claims. That's it. That's it. Now, my anticipation was, all right, we're devoid of FOMC members. We don't have a whole lot of data. Maybe we'll get some cleaner action. It hasn't been terrible. It's been relatively choppy because what's happening now is debt ceiling crisis, that spectacle is behind us. And now front and center is this, and this is our CME FedWatch tool. We are creeping ever closer to that 80% where we will have, quote unquote, fully discounted the hold for June. In other words, no rate hike in June. However, that just means we've kicked the can down the road to the July 26th meeting. So just about 6 weeks later, the slight probability, or the possibility here, the most likely possibility at the moment, is a quarter point hike, but you'll notice it's only about 19% greater than the hold. And we're going to see those two columns, the ones furthest to the left and the center, they're going to be jockeying around for a position, right? And that's going to dictate whether or not we collectively expect another quarter point hike or not. But we are ever, ever, ever closer to the pause, and pause will precede pivot, right? We have to pause, then we can start thinking about November or December as when we get the Fed pivot, which is just at what point do we start to see the rate cuts come. All right, so that's what we've got to kick off the morning. Let's go ahead and jump into the charts. Take a look at whatever questions you might have. Type in the symbol, type in the time frame, what have you, whatever you think I need to know to best answer your question, let me know and we'll go from there. And let's start off with a quick peek at what's going on in the broader averages. And I'm going to give you all actually a quick peek on something I do in the morning. And you probably already saw this to the left. So when I'm in the chat room with everyone, in whether that be the futures room or whether that be the sector sequence mastery, there's a little bit of homework that I'll do in the morning. And you see this here, the pre-market 5. These are basic things that I've been teaching in whether it be my classes or whether it be whether it's my day trading classes, or whether what we do session to session in the room. There's just 5 things that I'm going to take a look at. What is the previous session close, right? Those of you that remember my day trading classes from, I don't know, 17, 18, 19, 20, I can't remember. We always look at the previous session close. We call that the line in the sand. Then we move on to the point of control. What is the pre-market point of control? It could be 2 to 9:30. It could be 2 to 9. It doesn't really matter. But where is the most volume happening? I'll look at where my propulsion is. Even on a 5-minute chart, it's really helpful to know if price is above or below the 200 exponential. I use a fast EMA and a slow EMA to do that, the 8 and 200. What is the underlying structure of the 5-minute? That's that multi-trend. Right now, we were dealing with it green. So now you see I'm going to actually switch this with you all right now as we get closer to the bell. That's actually neutral now. We're actually switching to more of a neutral trend structure. Gang, if there's anything, a lot of folks say, Rob, what's the most important indicator on your chart? And I'll tell you, it would probably have to be a toss up between my price movement ranges, whether that be daily price movement range or hourly price movement range or the multi. And if someone said choose one, I'd tell you it would be the multi-trend, because the multi-trend would work with everything else. Multi-trend tells me whether or not I'm allowed to be bullish or bearish, right? I can look for overbought, oversold, whether to be bullish only or bearish only. If we start every one of our trading approaches with directional bias, we're always going to be better off. So there's a little sneak peek at something I do in the morning with our traders. And these are levels that, I'm always keeping an eye on. And I think for a lot of you who've been taking my day trading classes over the years, you're probably already pretty darn familiar with them. All right, first question on the morning. Let's see. Stacy says, be sure to hit the like button on the way out. Yeah, I appreciate that. Thank you so much. John, with Tesla up pre-market. Yeah, let's take a look at Tesla. Let's do it. All right, with Tesla up pre-market, how would I project a day trade price target high-low? So, John, I mean, we need a setup first, right? So let's do this. Daily time frames up, hourly time frames up. So that leaves some short-term swing trades at 1 to 3 day window. Those are both valid. I need price to get down to the gray zone to do anything, but that doesn't mean I can't day trade it. All right, so look to the far left. There's my day trading time frame, 5 minute. Gang, one of the things I see a lot of traders doing is just being very, very, very I'll use the word fluid, but I don't mean that in a good way, with time frames. There's 17 different time frames that they'll look at: 5, 12, 13, 30, 60, 4-hour, monthly, weekly, daily, 39. Nothing's wrong with any one of them. Pick one or two, right? Because what happens is we will, because we're human, will continue just to look for whichever one agrees with us. Bad idea. I moved away from multiple time frame analysis a decade ago. Best thing I ever did in the 30 years that I've been trading. All right. Probably second best thing was automate my volatility levels. All right. So what is it that I want to do? On the open, if there's anything we can do with Tesla, what I'd say is try to find where the support levels are. Know where your pitch is. So that way, if price gets down to that level, we can do something with it. I'll tell you, we're still 21 minutes from the open. So obviously, you're asking for a setup before the bell rings. I can give you what I know right now, right? So we know where the pre-market high-low is. We can look and see where the point of control is. So I can do that on TradingView, right? So let's pull up Tesla here. Okay, so I can see where the pre-market, let's say we move this to a look back to 7 a.m. I can look where the point of control is, right? So there's Tesla 5 minute. There's your point of control at 228.21. I can also see that I've got a volatility level at 224.60, right? These are all things that I'm going to look at saying, if I know where the support and resistance is, and I know I want to be a buyer, support then allows me to potentially be parking a limit order to buy. I also know there's support based on the Darvis at 227.06, right? So I'll identify what all those levels are first. And then that if the support levels are buy zones, the resistance levels are where I want to take a profit. Okay. And that's what I'll know at 9:11 in the morning. I think it makes sense to give the market at least the first 5 to 15 minutes to sort of give us some ranges. If you don't want to wait till 10, that's fine. You don't have to. But the first 5 to 15 minutes, let the market open, because right now we're not looking at a liquid part of the Tesla day. S&P would be a little different. S&P futures would be a little different. NASDAQ, bonds, crude oil, that would be a little different. All right. So moving on, let's see. KRE, Matt. Yeah, KRE is really interesting. We've been talking about risk appetite in this week in the markets. And the issue that's out there right now, we know that this is the time we want to start getting bullish, gang. Why? Because most of the reasons for bears to have traction, earnings are going to be bad. They weren't, right? Oh, the Federal Reserve is going to hike us into a recession. And we know a recession is going to possibly give the rate cuts that we want latter part of the year, and it's going to increase labor productivity. Okay, next, the debt ceiling. We've been through it 108 times, right? We knew how that story was going to end. We just didn't know when it was going to end. That's behind us. So now what we're seeing is, what's the next reason to sell? There's not. I mean, we run out of reasons to be bearish. Although the perma bears are going to always be out there, because calling for apocalypses is always going to be very attractive. You know, that one person who seems to know where the depths of the market, right? Where is a Marianas Trench in the market? It grabs attention. There's a reason all these years later, perma bears always seem to find their way on television, because that scary stuff, the dark at the top of the stairs, it works. It grabs attention. Is it right? Realize perma bears have slight moments of being a little right, and the rest of their careers are complete misery, right? So don't be a perma bear. The markets are skewed to the upside. I know you all know that, right? So KRE would apply there as well. At some point, we're just going to find the path of least resistance is higher. But when, right? And you got it there. It's gone neutral as of the 23rd, 24th. We've gone neutral, and now at least we can be open. Let's remember, we could still sell off a little bit, right? But the downtrend is gone. So now we can look at the gold or the gray zones for shorts or for buys. But I would start looking at the lower end of the range, that daily price movement range gray zone, for buys. And the same goes for XLF, by the way. And then if KRE is heading higher, Russell's going to go along. If XLF is heading higher, Dow is going to go along. Both those indices are heavily weighted with financials. So in terms of the top holdings, be careful with that, because, Matt, if I recall, it's still very much not a high concentration weighted sector on KRE. However, I would say, if you're looking for price movement ranges, I wouldn't even get started till about 42.25, 42.30. And with the candle that we saw yesterday, we're probably going to see some follow through. So may not be the best time quite yet to engage the long side. Maybe day trade it today, Matt. Maybe day trade Russell or KRE today. Wait for one of those days where we pull back a bit, and then we can engage on that day that we have a nice blue light special. Okay. So I like the long side. I'm with you. I think it's time to start getting bullish Russell, time to start getting bullish KRE, time to start getting bullish Dow, time to start getting bullish XLF. It doesn't mean buy into new highs though, gang. It means start waiting for your buy setups to trigger. All right. So we talked about Tesla. Question here on AMD. And let's see here. AMD, another big candle up. Now, here's a really good example of not to chase, right? So thanks for the question. Yesterday, we saw a big move higher. NVIDIA is going to be that first one into the jungle with the machete, clearing the path for other stocks in the SMH, right? I don't want to set up longs in NVIDIA. That's moved 100 points. The rising tide in semiconductors. What other stocks that were on the verge of maybe moving higher now have the ability to do so, because there's a cleared path, right? NVIDIA went first. Now there'll be others that can follow. So AMD obviously had a great day. However, if traders decided to buy the high, this is why I caution traders so much. Please don't buy into new highs. Wait for pullbacks. Well, you might say, okay, Rag, I get it, but what's a pullback? Let me show you. And it's the less frequent side of consideration in trading. Most traders like to buy new highs. Most traders like momentum. Well, let's talk about the other side of that. This is support. This is support. This is support. This is support. There were 4 days of levels in the gray zone of the daily price movement range. Here, 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 and here before that candle right there. And yet, those 4 days were probably pessimistic, ignored, maybe shorted, heaven forbid, in an uptrend. That's a terrible idea, right? So I love that you're looking at it. What I'm trying to say is, think upstream of an extreme move. That's an extreme move yesterday. Was there a setup that preceded it? If we can train our eyes to find those, we're in much better shape. So traders who got long in this, they might be fine, right? They might be fine. We may not pull back all that much. I hope for them that's the case. But again, I don't want to base my trades on hopes. If we're pulling back to about, I'd say only about this area here, not terrible, not terrible at all. I want to wait for one of these 1, 2, 3, 4 opportunities that preceded the move higher, which, by the way, also allowed for buys of the calls at a much, much cheaper price. When we're buying calls with bullish momentum, we are overpaying, aren't we? When we buy calls in a neutral, if not bearish environment into support, we're pickpocketing those folks writing the options for us. So I hope that makes sense. That's the way that I'm looking at AMD. Netflix, I like the long side of. And so you might say, okay, Rog, let's do the same thing there. I'm going to be very steady with this stuff. Here, here, here. Okay. Right now we're sitting at 412. So let's say you took the sort of the little bit of sideways movement here on the 6th. On the 7th, we're opening up here. Okay. So not that dissimilar. And you might even say, Rog, was that? Yes. Here, nothing here, right? Nothing on that day. Here, here, here. What's the move upstream? What was the thing that preceded where we are going to open this morning, almost at 413, 412 up in here? What's the thing that preceded it? Daily price movement range. Overall uptrend, we buy the volatility-based support. That's a really good look. Okay. But again, most traders are going to come upon setups. All right. Most traders are going to come upon setups after the move. When I'm hoping, gang, I don't want to be salt in a wound saying, oh, the move's already happened. Not at all. What I want to say is, can we look upstream to the move, like what happened before, and say, oh, this is how I can position myself in this kind of environment next time, right? That's what I'm hoping to point out, because once we train our eyes to those things, which are really, again, 80% of traders, gang, are momentum traders. They love new highs, and that's fine. In an uptrend, that's fine. But in chop or fresh uptrends, it can be kind of tricky. Let's see. Peter says, my trading has improved significantly since I got the DPMRs. Peter, I appreciate that. Thank you so much. It's one thing when I tell you all that something works. Of course, I would say that. They're my tools or my creation. And the reason it works, Peter, and it's not a surprise, the reason volume and volatility, volume anchored VWAPs, V-score, volume ledges, the reason those work and the reason volatility works is because if we're looking to decode what institutional flow and big money, as we like to call it, and commercial banks and funds, what are they doing? They're looking at volume and volatility, right? That's what they're looking at. They're looking at volume and volatility. So we can coattail what they're doing. In fact, that was the whole reason behind my shift to a lot more reliance on volume back in 2008 after, that thing that happened in 08. Some of you might remember. Yeah, when I was in total mode of, oh my gosh, is this the end? No. Where is the volume? Coattail it, just like we surf a wave. All right, gang, as always, thank you so much for being here for Charts and Coffee. Thanks so much for participating. Thanks for caffeinating and dominating with the crew each morning. I'll see you tomorrow. Same time, same station. My Sector Secrets Mastery, folks, our doubleheader is up next. I'll see you in the room shortly.